Hey there, folks. This is my announcement video for another market internal indicator. In the market internal review videos, past couple ones, I made mention that I would be potentially releasing a new RSI type indicator based on some feedback I've received from MIT, just folks saying that they needed something simpler. I've spent a couple weeks really trying to distill this information into a simpler view. And after canvassing a handful of people and watching them post their charts with MIT, some of the modifications that they've done to simplify this display because it was more than what they needed or just too noisy for them, I've come up with the RSI format because it's quite a long-running standard kind of format of viewing momentum and sentiment as far as overbought, oversold, that kind of thing. So I think it would be something that is going to replace MIT for somebody that is not, they do not care to have pinpoint accuracy for entries. They're not a data nerd. They're a little bit more able to just kind of ebb and flow with the markets. I mean, literally what I do, like on this day, I'm trying to nab entries. We're literally right on this line, grabbing this wick low, and I'm very mechanical and precise with everything. I realize not everybody is like that. So this is going to provide, I think, something in between people like myself and people that are maybe a little less anal retentive. I don't know. So without further ado, I'm just calling this market internal RSI. At first glance, it probably looks quite standard to the regular RSI. And that's because mostly it is like a standard RSI. Now, if you go take the RSI for SPY and you plot it on your chart along with market internal RSI, you will find that it's going to be eerily similar in a lot of ways. The movements, the peaks, they're so similar. But I promise you, this data here is not from this data here. This RSI, built into TradingView and hundreds of other trading platforms, it's just reading the price. If we go look at the code here, they are just doing two different RSI moving averages. That's all RSI is. It's basically doing some math against a simple moving average, believe it or not, and the summation is multiplied by this particular formula, and it is exponential in that it's accentuating price in a certain way. Okay, now it's doing that, and the way that it does it, we should see numbers on a scale of 0 to 100. It's doing that based on the 14 period length. Okay, what I'm doing is I'm running through calculations for for the 4 different internals that I do use in MIT. Advold, my own custom trend formula, and tick. Okay. Now, one of the things I am doing is I am providing a weighting. I'm giving weight, heavier weight, to certain internals versus some of the other ones. The intent of this is to show where the internals are from a overbought or oversold standpoint. I took much care to have the weightings, to have the measurements work out, to basically read the internals via MIT, how I read them, as far as are things bearish, or is the move over, is a reversal happening, that kind of thing. So I spent quite a lot of time finding alignment between these two and the best days where SPY is completely 100% aligned to the internals. There's no misalignment. I needed a data set to do that measurement and to do that analysis. So I laughed very hard when I get this done, and I thought to myself, boy, I wonder what SPY's RSI itself shows. And I was flabbergasted by how dang similar they are. And I thought, there's no way I could release this. People will think I'm that I've just taken the RSI code and just put some colors on it and called it the MIRSI. I'm going to go ahead and publish it because I found some really interesting things that I think could be some really killer signals. And if you're looking around, you might already see something. But the main thing of this is just here on Wednesday, August 9th, not too far off from when I'm publishing this video, we see here SPY is, gosh, we had a gap down Monday to Tuesday. We did come back up, but still, not in the highs, not in the lows either, about middle. But this day, SPY opens up mostly flat. Look at what the market internal RSI shows. Market internal RSI says overbought. Basically, very strong, bullish move, could be over. But notice on SPY's own RSI, just reading the price here, we have middle of the road. Now this still isn't too bad, but this is nowhere, if you're an RSI or a momentum trader, this is not anything that you would go short on. This is nothing. This is chop. This is middle of the range. But things like this, that's oversold, right? Maybe you would look to go long, or you're looking for a divergence, whatever. So I feel like these particular moments in time where the markets, the entire New York Stock Exchange, if you can measure it in an RSI format, which is what I've done here, it shows you where the market as a whole is potentially overbought. And I think that's a very powerful measurement. Now, SPY, I find to have fantastic alignment to the New York Stock Exchange most of the time. So I think for SPY, just as an RSI, might not be as earth-shattering of an addition to your trading from just standard RSI, save for moments like this, right, where we've got this divergence. Divergence. That brings me to the next feature of this RSI. One of my good trading friends, I explained the predicament, and I had the RSI of SPY's price on and my proposed RSI version of MIT. And we had a discussion regarding this divergence. I think it was this one here. And he mentioned, well, what happens if you overlay the two and measure that. So now we don't need this RSI. So I do provide this as an option. It's not enabled by default, but you can show the symbol you have loaded on the chart. You can show the RSI. It's just standard RSI, nothing special. But it shows you when they're not in sync. So we just saw in the standard RSI how SPY's RSI is in the middle, but the market's RSI is up at the overbought area. This histogram here, down at the bottom, measures the distance, the divergence between the RSI of the symbol you have loaded and the RSI of the market. What I discovered was at the moment where you have almost no divergence at all, it's an incredibly powerful signal. Something about the momentum of the market and the momentum of the stock, whatever you have charted, when those become aligned. And in the case of the New York Stock Exchange, it's not really just the momentum, right? It's the price, it's the volume, it's the delta, right? The tick, it's the trend which is looking at the price in comparison to the volume. If you watch the very original video I published, it's the ARMS index. All of that combined is now aligning to the symbol's momentum. We get this signal here, and it's saying everything's aligned and we're oversold. Now, I've been back testing this for a while, and I mean, it's just a very powerful signal. So we get about a $3 move off of that. And this is a pretty clean move. And notice, if you're into the TWAP, we get that first deviation reclaim. And I personally had longed this trade this day. I covered it on the market internal review for that day. Now I used MIT. If we look at MIT, what's MIT show? MIT shows we had a tick low here, a tick low here. But we had a divergence in price between SPY and the New York Stock Exchange delta. Now, if you're just looking at add and vold, you're not seeing much on the bullish side. It's actually almost completely bearish still, but tick average closures is on the rise, and we get a 20 bull flip on the add and vold by about here. But this measurement here tells you almost dang near the absolute bottom. Now, it's not guaranteed, obviously. Nothing is. But what a cool signal. Then we get this signal. So another period in time where SPY's own RSI started to diverge as we're on our way up. Then it converges right at overbought territory. Then we get the cross down on the 14 simple moving average of the RSI itself. And what do we see? We see another $3 move. Incredible stuff. I'm very excited to publish this and get people's opinion on it. Because I'll tell you what, even with MIT on this day, when we finally get this cross down, there's some trend imbalance, but there's also periods where it's empty. There's no balance or imbalance. We do get a bear flip on the add and vold, so that gives us room for downside. But just how neat to see all of this in one single measurement. Now, I do have alerts. You can set up alerts on the RSI. Just one though. I'm going to add two more before I publish it. One for oversold and overbought just on the RSI itself. But those are the only other two I'm going to add. But the most important one that I felt anyways was I guess I'm just calling it the RSI squeeze. That's where both of the RSIs have squeezed back together or converged. Squeeze is such a common term these days in trading, so that's why I chose that. But it'll tell you, apparently I have a spelling error. I'll fix that. But it'll send you an alert on bar close. I always recommend bar close. It'll alert you to these. You don't even have to sit there and watch for these to occur. You'll be alerted to them, and then you can execute a trade if that's your thing. I mean, there's some amazing signals just in this day alone. Really cool. You don't have a squeeze signal here, but you do get this overbought signal and a cross down. And wow. I mean, even if you waited for the 50 cross and a retest right here of 50 or the moving average, you still could have captured quite a lot of this downside move, almost $2. I mean, this day right here, there's some you could have almost grabbed literally every move of this market with this one indicator if you're really crazy. Just really thrilled with the signals. Same here. So these signals, we start the day off oversold. I'm going to turn off SPY's RSI. We don't really need to see that. Start off oversold, flat, smooth average on the RSI, and then we finally start to pick up. So very neat. If you were in, I don't know, maybe based on TWAP reclaim or something of that nature, that's another great signal there. Or even if you waited until we start showing some green on the RSI, however you like to trade, however you like to manage your risk, still just a fantastic tool. As far as these squeeze signals go, one thing I'm noticing is the squeeze signals themselves are treated slightly different depending on what the histogram has shown already to the left of the squeeze signal. So like these ones here, very low divergence on the histogram, but then we get this drop down here. So overbought, boom, gap down overnight. Then we get oversold, flat, mostly divergences, and then we get a squeeze signal. It seems, not all the time, but it seems like so far the way I've read this is when the histogram is mostly flat before the squeeze, it's a continuation signal. So both of these you would just continue with selling in favor of what RSI is telling you. Now, I think this one, these ones might not have worked out the best, but like this one over here, we get this huge divergence, oversold, squeeze signal. These ones are the ones you invert. So massive divergence, squeeze, whatever side the squeeze is on, oversold is a buy, potentially. Overbought is a sell, potentially. It's not a guarantee. Please don't take that as a guarantee or any kind of financial advice, but that's just in my limited testing. That's what I've seen. Another way that you could think of it is like a period of exhaustion. If you're seeing a really strong, one-sided market, and then you get this squeeze signal, it could just be a sign of the end of whatever that move is. Like this day here, mostly weak, flat RSI. There's not a lot of strong movement. It's sitting in the one side for too long for any kind of strength. I mean, you can tell already looking at this day. But if we go find a more fun day here. Okay, so here's a couple squeeze signals, mostly low divergence. What do we get? Continuation. Now, it's continuation, but the RSI is starting to trend down. So this is a little bit of an interesting signal. We get these ones here, mostly flat divergence. We finally get the squeeze on the sell side. Average is pointing down. That's continuation. Same here with these. See, mostly SPY is in agreement with the market. That's why there's low divergence. So when you get these squeezes, it's basically just potentially an entry for a continuation in the favor of the sentiment of the market, which should be very simple to see is down. So it's just a little bit of a nuance. Now, here is FOMC. We get a squeeze at overbought. Now look, we have lots of high divergence. This is not like this. This is a big fat divergence. So what do? We invert it. Boom. We come right down. Now I don't know any other kind of indicator that can do something like this, but it is effectively calling tops and bottoms or continuation. That's really powerful. The days that it doesn't call anything, I mean, yeah, you're missing some stuff, but I don't know. I'm kind of becoming a fan of just waiting for these dang signals and forgetting about it. But that's just me. I'm going to be looking at this and trying to see if I can improve it at all. This was the main area of study, just the RSI measurement itself, not this. This was literally like 5 minutes of work. So I do not have a lot of time with this. This I do. So we almost get an oversold right around what happens to be the bottom, and we curl back over, and away we go. So this is very nice. As a replacement for MIT, like I said, I don't think it's going to replace MIT for me. I will be looking at it off and on throughout the day, but this is perfect. If you look at MIT here, you see the tick 500 break, mostly green, add and bold, price and volume on the stock exchange all day. There's not really much of a reason to try a short, especially at tick extreme or 500 break anyways, which is the most extreme we had seen all day on this day. That's an inversion long attempt, and boom, there you go. So this is simpler, it's simplifying, but anytime you abstract, you lose context. Just keep that in mind. I'm going to be releasing this shortly. There really isn't much to configure at all on this indicator. I left it at 14, and I've calibrated everything to that because it's a common RSI measurement. It allowed me to bring in the symbols RSI as default standard, what everybody uses, which then allowed me to calibrate the divergence calculations and everything else. I wouldn't mess with this. Everything's been calibrated to that, all the weightings and everything that I've done. The RSI divergence and squeeze, if you don't want to see them, you can deselect them, and you just have a standard, nice little New York Stock Exchange in your pocket. You're on mobile or whatever, slap a couple moving averages on the price if you don't want to use a bunch of other stuff. But boy, I mean, this is this is a pretty powerful little tool here. I definitely hope that this helps some people out. I'm going to be collecting feedback from people that have personally asked for something like this. I'll be in touch with them, but if you find this useful and you're not in contact with me on the regular, feel free, please, to leave a comment somewhere. TradingView, YouTube, Twitter. I'd love to hear about any of your success. New tool, I'll have it as a link on the video description, but you can also type in Market Internal RSI on TradingView. I don't believe that name has been taken yet. If I bring it up in videos, I'll be calling it MIRSI. I just thought that was quite the wicked name for it. Enjoy, and till next time, I'm sure I'll have something else cooked up before too long. So thanks for watching. Happy trading.